I start with my face or just
With your face, say like, so why are these
okay,
with your face?
my
What are you
face.
thinking? Hey everybody, thanks for tuning in to another episode of Square One. Today we're going to talk about diversification. Danny, why don't you just go ahead and take it away?
Diversification means basically that you own several different types of companies. Ideally, let's say a tech stock, Google, for instance, and maybe something like Home Depot. So there isn't a large correlation in your portfolio where if one industry starts to struggle, your whole portfolio could actually drop a lot at that point. If you just own a bunch of discount retailers or Google, Apple, Facebook, Microsoft, and tech stocks start to perform poorly. There are 11 sectors for the S&P 500. They're kind of just broadly dividing companies into different, categories depending on what they do for business. In between there are subsectors to get a little bit more granularity into what you're actually owning in between each stock.
Let's see some examples of each sector and all that sort of good stuff.
We'll start with technology. I picked Yelp. None of these are actually recommendations. They're just examples to show different sectors and the kind of diversification you would ideally want in a portfolio. The good thing is with zero-based commissions now, you can trade and have broad diversification, even if you only have $1,000 or $10,000 in your account. Communications is the actual sector. I picked Verizon. For consumer discretionary, Dick's Sporting Goods. People don't need to buy sporting goods. They want to. That's why it's discretionary. For consumer staples, I picked Walmart. People typically have to go to Walmart for their food and drinks and everything else. For finance, I picked JP Morgan. Everybody's familiar with that. For energy, I picked BP. HQY is it's really a healthcare stock, so the subsector's right, but they have them under technology because they are a newer, new age kind of medical/tech company. I actually really do like this one. I will recommend it. It's a tech stock, but also healthcare all in one. And they have a lot of growth because of that. You'll see their sales are averaging a growth rate of 43% over the last 5 years. There's a lot of upside in this stock. For industrials, I picked Caterpillar. They make industrial goods as far as construction machinery. Heavy industry type of work is done with their equipment. So that's why it falls under the industrial category. Duke Energy is self-explanatory. They just provide electricity to all their customers and keep their houses lit. Simon Property falls under the category of the actual sector for real estate. They own a massive amount of real estate across the U.S. As far as malls and shopping centers, outlet malls, things like that. And lastly would be Basic Materials. This is Nutrien. They actually I do recommend this stock, ideally a little bit lower, but it has a good dividend, and they actually produce fertilizer. So farmers, regardless of how poorly or well the economy is doing, will continue to plant food because people need to keep eating. I think long-term, it ends up heading towards that analyst average target price of $58.
Do you need to own every single different type of sector to be like technically diversified or what?
It's rule of thumb, you don't want to own more than 10% of any stock in your portfolio because it's just a concentration risk at that point. And then secondly, ideally, you do want to own different sectors because of the same issue where if you own Verizon, AT&T, Vodafone, and a few other big telecom companies, it doesn't really help you much. If the whole telecom industry starts to struggle, your portfolio will underperform a more diversified portfolio.
Apart from owning individual stocks, you can also own ETFs of these sectors, right?
That's actually the broadest way to have exposure to all of 11 of these S&P sectors. There is an ETF for each one of these sectors in particular. If you just Google, they call them spiders, is just the moniker for it. If you Google S&P ETFs for each sector, they'll come right up at that point. The popular ones being XLU for utilities. People really like it because you get that utility exposure, you get the average dividend of all those holdings, and you are very diversified by having a small amount of money in each one of the utilities by buying one stock.
All right, guys. So we just wanted to touch base really quick on the different sectors and how to invest with decent diversification. Next week we will do our video where if you have $1,000, what do you do with that $1,000? And we'll kind of break it down for you and help you out with your initial investment of $1,000. Thanks, and we'll see you next week.
All right.
Nothing. Just all right.
All right.